Welcome to TradeTheMBI.com. This is John's report is for the 25th. Well, we got a brand new high out of the other day's move and promptly sold a little bit back into it, finishing relatively modest below that open, but still within expectations here. We're easing off just a bit from that magenta and the strong push. It had some short activity that was enough to give it a little juice, but uh, we'll see if that's able to continue because the MBI white's got to really continue to press, and you'd have to see a fade off here of magenta and yellow for anything to really be of consequence. We do still have the positive extremes, so even those filling within a normal up move would not be counter to what the readings are. So it's just one of those things where it's a bit exuberant, and we know that they fill back in. It's just a question of sometimes they take a little bit of time. Usually it's the later ones that will fill back and forth as we move across. But you've got to have some impetus that drives things, either to increase shorts that will drive further movement or some kind of positive earnings and those kinds of things, which are all taking place. And depending on the situation, I think that you get those ups and downs accordingly. When we look at treasuries here, you can see the yield improving slightly, still well above the normal range, but that's to be expected. We get these situations where, particularly this bond market of the last years or so, has been a little confused. It takes them a little while to figure things out, and I think they're sort of modifying on rate cuts. And literally, this all gets down to the question of oil. And we can see oil now over that 75 range. And if it continues to accelerate, that becomes really problematic from a growth standpoint, inflation standpoint, and certainly that poses lots of issues for the Fed. The absorption over time of the rate increases really having their heaviest impact right about now. So I'm sure the Fed is keen to be paying attention to exactly what's happening and prepared to ease if they think that things are, breaking off, but only if inflation's not a predatory threat, which it continues to be. But we all know that their target is flexible. It's got a little leeway in it. So from a euro standpoint, doing nothing at this particular stage, still way elevated from where it should be. Still reading in a negative appearance. I wouldn't be surprised to see it get back down towards that middle 1.7 range, but does have a lot to do with how the dollar behaves and that. When we look at gold's not seeing any excitement at all, and reasonably so, without a driver of inflation or global conflict escalation. Um, Not a whole lot happening now. We may see that as NATO decides to do its thing, and the winter offensive by the Russians maybe escalates to the point that Ukraine is on the verge of, breaking down. There's a lot of ifs, and then of course you have the situation in the Red Sea and all of that. All the fears that initially happened with the Israeli conflict and that haven't materialized, and so that was a net bonus for the market. And definitely a lot of the negativity that was priced in from the brief dip certainly was abated as that thing really didn't escalate, at least hasn't at this particular stage. From a Bitcoin standpoint, clear MBI white lead led to the decline, and we were very easy to see that one was developing. Literally just filling in the positive extremes that began this last run. We had this consolidation period that was all positive extremed as well, but that gets you all the way back to the original breakout move, just above 30, right around 29 something here. Yeah. But for now, you got MBI Magenta making a turnaround, and that's just because you got into this super deep, was that minus 23 range, and that usually gives some degree of a bounce back. Usually you would break down below that 23% if it was much stronger. So I think we're likely to hold in this area. develop some support. And again, this is going to get back to the whole news cycle of, ETFs, blah, 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 blah. And I think that was all a bunch of nonsense anyway. It was just create the hype, sell the news. And that's the cycle that we're in at this particular stage. We expected ETH to potentially break down below that 38. It did. And this is still hovering right there, but still within much weaker read than the Bitcoin. Looking at it from the 50K standpoint, so we had the long from before, took a brief start at it, but it was a little earlier than it did this next one and got out right before the dip here. And you can see from a 50K standpoint, still a little bit of early weakness with that MBI lead. Nothing too catastrophic. Intraday, we started out with a nice pump, stayed up there, wasn't able to really push into relatively new highs, and that's when we saw the cascade lower. And that was pretty much how that ended. And we've just been consolidating here in the post market. Within that, you would expect to see a move that would bring us back up into that 49, 12, 15 range. But if it fails to do that, then I think that you're probably looking at significantly more weakness. So definitely keep an eye out for that. As always, anything relevant, I will put it on the Skype chat. Have a good one. Trade well.